Hi, everyone. I'm Christopher Thornycroft with Redwood Logistics, and welcome to the Redwood Rundown for the week of May 2nd, 2022. Diesel fuel was just updated today to $5.50 per gallon, an increase of 35 cents, a new record for the cost of diesel fuel. When we look at what the cost of diesel fuel was last year at this time, we're seeing an increased cost of about $182 to the carrier on a 500-mile run. As we're looking at demand, we can see that the outbound tender volume index continues to creep on up. We had noted a couple of weeks ago that what we were seeing with the decline was likely attributed to Easter and that we were more likely to see an increase in those freight volumes as the month went on. We certainly saw that the outbound tender volume index now over 12,700, all things indicating that actually demand, while not quite at 2021 levels, is still fairly strong. The spot market remains in a more balanced environment than what we've seen recently, but still, the load to truck ratio for the DAT for the last week of April was 3.87 to 1. That's still fairly strong. That's still above an equilibrium. That still doesn't indicate that shippers have all the pricing power in the world, as there are some markets out there that are operating very differently. We still think that this environment that we're in is significantly tighter than a freight recession environment. That may change. What happens in Shanghai and how Shanghai gets out of lockdown is going to have a lot to do with it. We're pretty certain that we're going to see a slowdown in freight volumes about mid-May. That will coincide with the overlap of the International Road Check Day. That will be the focus will be on brakes. We'll see how that impacts the market. A lot to go over, still a lot to be revealed. One thing that we do know, this is a time in which you really have to take care of your carrier partners. That rise in diesel fuel is abrupt, it's very dramatic, and it's going to cause a lot of pain. When you combine that with the increased costs of parts and labor, the increased cost of insurance, increased driver pay, there's some carriers right now who are looking at their balance sheets and wondering if they can stay in the market. We're going to do our best that we can to be able to support them. That's all we have for this week. Thank you very much. Stay informed. Take care.